Hello, everyone. Welcome to this special webinar with Raoul as part of the Has Everything Changed campaign that we're doing at Real Vision. To start everything off, Raoul, I know everybody is super excited to hear a little bit about your current perspective on the markets, but this is really about something special that we're doing at Real Vision this week. Really not this week, over the last week, this week, and then a little bit into next week as well. So why don't you tell us a bit about Has Everything Changed, why we're asking that question at Real Vision?
Yeah, I mean, look, COVID is an extraordinary crisis and time for the world, and it's changed so many things that we're trying to get our heads around it. It's changed politics, it's changed the real estate market, it's changed passive flows versus active flows, it's changed tech and old economy. What does it all mean? Are these massive changes? Is this a structural shift that we need to now navigate something entirely different? And getting these kind of big changes right is crucial to not only our investing, but to our lives. What does it mean for business? You know, what does it mean for where we're going to live and how we're going to live? Or maybe we own real estate and we rent it out. Am I going to survive this? You know, these questions are really big. And I think without having experts to help people navigate it, you can get into some really serious trouble. So I wanted to make sure, and we all as a content team got together and said, we need to help people, give them as much information from the smartest people in the world to actually figure out what the hell is going on and where is this all leading to.
Yeah, and we're looking at it from a whole bunch of different perspectives and at different asset classes. So it's not just a big picture macro overview. I know, we've got some of the traditional Real Vision stars with you and Julian. Next week, we've got David Rosenberg looking at that. And that's really sort of the bread and butter of Real Vision. But we're doing some different things this week. And we're looking at specific industries. We're asking people who really have different expertise about their view on this question.
Yeah, I mean, I'm looking through the list. We went to Deloitte's kind of real estate expert to ask him about his view on the real estate market. Alex Saunders, who's an expert in DeFi and the crypto world. We want to know whether DeFi is a real change. I mean, are we moving towards a decentralized finance platform? It feels like it's coming that way, but things really changed over the last 3 months. So I wanted to pick Alex's mind. And then we've had some magic as well, like Hugh Hendry without a shirt in an alleyway in St. Bart's whilst eating lunch, interviewing a really legendary bond investor that nobody's ever heard of. So we've got some magic there as well for people who want to learn new things. But really, it's trying to get an understanding. Tomorrow, there's an interview that I did a few days ago with Keith Raboy. Keith was one of the PayPal founders and is part of the Founders Fund with Peter Thiel and all of those guys, and the investor in Opendoor, and created so many incredible Silicon Valley businesses. So I wanted to pick his mind. Okay, where is technology going? Where is VC going? Where are the opportunities? Where is this world going to? Because these guys are at the cutting edge of all of that. So I'm trying to tease apart not just what the financial markets are showing us, but what the early participants are, and saying, okay, these are the big trends that we're seeing. I think that's going to be crucial.
Yeah, I just watched your interview with Howard Lindzen that's coming out next week, and it's similar to that Keith Raboy piece in looking at some of the big trends, and as well, he really pulls no punches in the interview. He's very forward with the way he thinks, and some of the things he was saying about, like, oh yeah, the old economy is dead, the new economy is what it's all about, and that there's actually a shortage, and some of the different ways that we can explain. Everybody has been perplexed by the meteoric rise in equities, and I think we got 4 or 5 different perspectives from different people on why they think it's happening.
Howard and Keith kind of have half changed my view about some of this, that I now think that what is going on in technology versus old economy may be much more pervasive. Doesn't mean it can't correct. This is very overvalued. But the actual truth is we don't even know what valuation is any longer. There is a real huge change when you're trying to value businesses, one versus another, where some of these tech businesses have 80% margins, no debt, and just massively generate cash and are growing at 300% a year. It's so difficult to value in a world of almost zero interest rates. And they could be worth almost anything. And that's what we're seeing. So trying to navigate what's real in those trends and what's not. And I've been surprised how much my thought patterns have evolved by speaking to some of these people.
I personally, like after watching the Linzen piece, I was like, wow, that's very different. Some of the things you were saying were very different than things you were saying just a few months ago, which you say it all the time. I reserve the right to change my mind the second I stop talking, which is the mantra of anybody who has their head on straight in finance. Um, but that was very interesting to me. But we do have some stuff that is kind of bread and butter real vision, and a piece this week coming out on Friday that we're all very excited about,
Yeah,
which is
this is great for me, right? Because there are some people. The hedge fund world has changed too. The hedge fund world used to be about the Stan Druckenmillers and the George Soroses and the Julian Robertsons and these particular shops that were basically one guy against the world, right? The legends of the macro industry and the hedge fund industry overall, in the long short space and stuff like that, Lone Pine and some of these big players. And then in the last 5 to 7 years has been the rise of the platform. And one of the most famous people in this space is a guy called Dmitry Balyazny. Some won't know him, and others will know him very much because he's very famous and very well regarded. Balyazny, Millennium, Graham Capital, these are few of the large platform players. And I got about an hour and a half with Dmitry, which he never appears anywhere. And I got to hear not only his journey as an 11-year-old immigrant coming from Kiev, but how he got into the finance industry, in the hedge fund industry, with no real background, with no real ability, and made it work and became one of the most famous people in the space and most well regarded, and then created a business that almost made it impossible for anybody else to enter the industry. So he's kind of that's when you hear about the state of the hedge fund industry now and the kind of stuff that they've constructed, you realize how far this space has moved forwards from the old days. So that was really interesting to hear Dimitri's opinions because now a lot of people are still looking at getting into the industry and what's going on and how hard these people have made it, the barriers to entry they've created through technology and kind of mathematics and all that kind of stuff. But then also getting his views on this technology thing. Interesting enough, he's got some pretty interesting views on that too, which was surprising to me for a kind of he's a macro guy, but he's also a stock picker. Super interesting to get his thoughts on some of this as well, and how the election will play out as well, and how he's thinking that through for his firm and through his portfolio personally. So I can't wait for that to come out on Friday.
Yeah, I know some of the pieces for next week are just being filmed. I'm interested to see how the tenor changes so quickly after the debate, whether politics will take front and center. I know we're starting to think about that here at Real Vision. What's going to happen? There hasn't been too much of that at the beginning. It's really been about these sort of big, much more long-term changes. And in some cases, we're looking at what has changed, but we're also looking at like what are the head fakes. So one of the guys that I was most excited to talk to was Dan McMurtry, who, very smart guy, up and coming fund manager, at Super Mugatu on Twitter. And he was talking about some of the things that are just total head fakes, and some of the businesses he's super excited to get short on because they've had this COVID boost. But they're not going to be able to sustain it. So as much as there are changes happening and we're looking at those, we're also looking at, what are the things that it's a total head fake. Everybody is calling like the classic one, the death of New York. Yeah, it's dead in some ways, but there are some other aspects of it that there's going to be great opportunities in the way that the city shifts. And so, it's not just the world has totally been rewritten. Everything is different. So I found that there's been a lot of unique perspective on this. One person that we've both gotten the chance to talk to, which turned out to be the secret runaway hit of the first week, was Jeff Booth. Why don't you talk about that interview with Jeff and what you got to hear from him?
Well, look, everybody is worried in the financial world about the dichotomy between inflation and deflation. And Jeff Booth took the whole deflation story to a whole new level and based it yet around technology. Technology seems to be a theme that's playing out about going forwards and navigating this. And Jeff was really, really interesting in his thoughts about what technology is doing. And people are interested in some of that. I had a huge takeaway from it as well. A lot of what we ascribe to as inflation is potentially the deflation of wages versus other things. And we talked through that in detail and what that might mean. And Jeff's got some prescriptions for the future as well that I thought were very interesting. That the life rafts, that people can help navigate this really difficult time. You know, the average guy has been really screwed in this environment, and many people have, and then COVID's kind of stamped on everybody yet again. Jeff's got some thoughts on that that I thought was really, really valuable.
Okay. Well, we've talked a lot about the content, some of the other people we
I've got
have.
another one coming up is interviewing this afternoon is Jeffrey Gundlach. So Jeffrey, one of the greatest bond traders alive, very well-known public figure, pretty well outspoken. I'm going to dig into him. I'm going to find out a little bit more about how he actually runs money, because I think that's going to be interesting to people, because we don't generally ask him that question. So I want to know what the secret of what he does is. And then we're going to go forwards and look at, okay, what he thinks has changed and what the opportunities are for him.
Yeah, well, in trying to get him and trying to book him, I've gotten to talk to a lot of the people at Double Line over the past few weeks, and it really seems like one of the things that Jeff is fantastic at is he's a great manager of managers. That he has built just an absolutely incredible team around him, which is part of what the value of Real Vision is tapping into the minds of other people and surrounding yourself with very smart people that you can trust and rely on.
So this was exactly what Dimitri Baliasny said. Listen, one of the advantages we have is we hire the smartest fund managers in the world in a whole variety of areas, and then we get to share our ideas. And I'm like, well, that's basically, as you say, what we're doing at Real Vision. We're getting the very smartest people in the entire world saying, listen, what do you think's going on? And at times like this, with this, is everything mattered? We ask them one question, because we know that everybody watching this now wants and needs to know the answer. So when you can corral this incredible amount of intelligence and experience to answer something for our viewers and members, that's really powerful.
Yeah. Well, we have kind of danced around it a little bit, talking about the content and the great campaign, and for good reason. But I know lots of people are probably watching this wanting to hear about your perspective. Now, you did 45 minutes to kick off the campaign. We're not going to give away the whole 45-minute spiel here. And then you also did a Q&A for our pro members where people got to take their questions that generated. Any good piece of content generates some big questions within you. And so you did the Q&A on that. But for the free viewers out there today who are watching, can we get 5 to 10 minutes of a summary here of what your view is at the moment? Because I do want to respect them, and that's why they're here. They want to hear from you, bro.
Yeah, and I went through this in great detail. It's like a 55-minute piece, expert view that I went through it on. But essentially, many of you will be familiar with the unfolding thesis that I shared publicly. The unfolding thesis is generally how bear markets unfold, but this one's going to have a twist. Usually you get the initial, oh wow, everything's kind of changed, the liquidation phase, when everyone panics out and says, I need to assess what's going on. That's usually at the start of a recession when people think, okay, I need to reassess. Then everybody usually has the hope phase, which is actually it's not going to be that bad, right? And markets crawl back up. This time they went to all-time highs, some markets, but we bifurcated. We had the K-shaped recovery of tech and top 5 companies going to new highs, oil companies, old economy companies, and most importantly, highly indebted companies, and the banks all started going down. So, and bond yields didn't go up while the equity market went all, these big dichotomies. And so my thesis was about this. From March onwards, I've been saying this is how it's going to unfold, is this phase that we're entering in now. We started in June and we're slowly moving into what's known as the insolvency phase. And that's because economic growth stays below zero for an extended period of time. And anybody with impaired cash flows and high debts or high costs goes out of business. And every day, and it's a slow process, right? The COVID virus, when the world shut down, is the quick clearing process. But this is the slow process of, damn, I can't pay my bills. It's at household level. It's at small business level. It's those restaurants. It's the local store. It's all sorts of businesses, but it's also the big giants of the industry, the General Electrics and those kind of old economy, heavily indebted, names that have impaired cash flows, and the market's starting to say, "Oh, I don't like the look of this." And they don't like the look of the banks either. They're kind of saying, if COVID goes on longer, maybe we've caused some real structural problems that could accelerate. Could more people become unemployed again? What does it mean for people's pensions as well? So these are the kind of topics that I go through in that expert view in great detail. But the point being is, I think we've tipped. I think the bank shares are showing us that something has changed and that debt is becoming an issue. Don't forget, we're going into an election now in the US where there's very little stimulus happening. The Federal Reserve aren't really stimulating, and there's no real government stimulus. Could we get a stimulus package? It feels like it's not going to happen yet. And it worries me that we go through an extended period of no stimulus. Meanwhile, Europe's got the virus back in spades. And Madrid's just shut down. Spain's got it bad. London's got it bad again. You know, the UK has got issues. So we can see again the impairment to cash flow. Again, this is not a negative 30% GDP like we had in the first quarter or Q2, but this is where GDP just doesn't recover fast enough. And all of those businesses start going under. You know, here in the Cayman Islands, we haven't opened to tourism. It's a big part of our economy. And we're not going to open till at least January, and maybe not longer. And what does that do? There's a lot of businesses who are going to go under, and there's very little we can do about it. And what knock-on effects does that have? You know, we've already seen a huge wave of people go back to their countries. You know, immigrant workers who are here, whether they're from the UK or Canada, or whether they're from India or the Philippines, they've all gone home because there's no jobs. And then you've got the structural problem is when it reopens, how do you employ people again? You know, we've got some really big problems that come with this insolvency phase. So I'm acutely aware of it, and I'm trying to help people navigate through that.
Yeah, and as well, for all of our pro members, it's sort of you and Julian dueling it out. And we did a similar video this week with Julian on Monday, giving his view. I won't paraphrase it here, but it's good to have those sort of guiding forces in the campaign as well as these external perspectives.
Yeah, and Real Vision's not driving a narrative here. We're genuinely asking people questions. As I said, I've been surprised that my mind has been changed. So this is not all about my view. My view is very clear, and I state it very clearly. But I've interviewed a ton of people who don't have my view at all, and I found that super fascinating. And that's the value of Real Vision: is you cannot go into such a complicated world as this and only have a confirmation bias, because you can lose everything in a market like this. So you have to take in information from people who are not kind of talking heads. You know, you're not going to get that information on CNBC. You're not going to get it on Twitter, and you're not going to get it from, reading a newsletter. What you're going to get is people with skin in the game, with a lot of experience, who are really smart and trying to think this through in front of you and taking you through that journey of learning.
Yeah. So, I'm sure people want to hear a little bit about your outlook on asset classes. Just thinking of, probably top of mind for everyone. We got to talk about Bitcoin today and what you think about that. I don't think your view has, of the views that have been shaken in this campaign, I don't see Bitcoin as one for you. If anything, it might have been strengthened.
Yes, nothing has changed for me. It is, still think the world's highest quality trade. You've got to remember the time horizon, though. The time horizon for me in this is 18 to 24 months. I've been surprised how non-volatile it's been, but that's okay. Just before the campaign, we had that incredible interview with Michael Saylor, who is the kind of trailblazing corporate CEO of a tech company that put the large majority of their treasury into Bitcoin. And he argues that really well on the Real Vision platform. I urge people to go and watch that. I mean, again, just sign up for the dollar, for God's sake. I mean, the amount of content you get for $1 is ludicrous. So, if you've ever if you're ever interested in Real Vision, now is the time. There's so much learning, so much stuff on the platform. But Bitcoin for me is the synthesis of everything from the changing technology to the change in DeFi to the insolvency to the complicated world of central banks printing endless money to try and resolve situations to the outcome of the US election and fiscal stimulus. it all boils down to there's one primary trade, and I think it's Bitcoin.
Okay. But Howard didn't shake you of all of the interviews. He seemed like a guy who you respected quite a bit, and obviously you've known him for a long time. You and Howard don't share the same view on Bitcoin. What do you think about his take?
You see, he is in a different world where he's a VC. So if you're in financial markets, non-VC, because VC is not accessible to most of us, right? So in financial markets, something that goes up 3x is like huge. And occasionally you'll find a 5x or 10x if you happen to back the right company. But for the whole market itself to go up, for the S&P to go up 2x from here, I mean, that's a 10-year event, if not longer. Okay, but Bitcoin has a potential 2050x. So the order of magnitude performance is huge. Now in VC, Howard lives in that world of zeros and 100x's. He was an early investor in Robinhood. He got in at a $10 million valuation and sold out at an $11 billion valuation. So when he's looking at opportunity sets of Bitcoin versus other things, he'll have a different perspective. And again, that's why VC is a very interesting part of this whole market as well.
But he's still exposed. That was the one thing, is he expressed his skepticism. He wasn't sure. I mean, his biggest investment is a broker dealer. We're talking about DeFi and tokenization and all of the different things. It's kind of funny. He's got skin in the game on both sides here. So which is an interesting perspective, is recognizing a valuable or just an asymmetric bet, and you don't have to buy in 100%. You still have
is what he's got an investment in eToro, and eToro features Bitcoin and other products for brokerage. So he's playing two bets here. One is the financialization of the millennials and the global economy as people are all around the world want to place bets on Tesla or Zoom or whatever it may be that's driving narrative and getting people brought into the financial economy, rightly or wrongly. A lot of people are going to get burnt in this process. But eToro is also a platform for crypto. So he kind of gets that bet for free. Because if crypto takes off, retail are going to be in massively, and eToro will do well too. So I get it. He's smart ways of structuring a bet that you're kind of getting a position that works both ways.
Yeah. So we're getting just a few questions in from the audience. Somebody wants to know, what the heck happened to Ethereum?
Nothing. It's just a more volatile version of Bitcoin, and I'm long Ethereum. I added into the sell-off, and it's just chopping around. I mean, it's tied a little bit to the dollar, a little bit to the risk on, risk off. It's all part of the same trade. It's a bit sloppy right now, but again, you can either trade in the short term. I have no edge in that at all. And some people are very good at trading cryptocurrency short term. That's not for me. I'm looking at what is the probability of this turning into a much bigger platform for finance and smart contracts and other things involving blockchain. Extremely high. So that's my bet on Ethereum. And if you're interested in that, Alex Saunders is another one that we interviewed a lot, and Alex is a real Ethereum guy.
Mm-hmm. Well, you're known for the two Bs, Raoul: bonds and Bitcoin. So I guess we'll go over from Bitcoin and we'll go to bonds. What do you think right now? You obviously crushed it earlier this year with the big euro dollar trade. I've heard you say you're still long bonds, but it's not the same. Can you help us make sense of what's happening in the bond market?
Well, interestingly enough, today we've actually had the biggest backup in yields we've had in months. I don't really even know what caused it, but the bond market's basically gone to zero volatility, and it's going to be a binary bet right now. Is, do we go to weaker growth? If we go to weaker growth and the insolvency is right, then bond yields are going to go to zero and probably negative. The UK just gone negative, following the raft of countries that have gone negative. So, okay, that's a decent bet for me because that fits in my macro framework. I don't think rates are going to go up a lot because the Fed have said they're not going to. So it's kind of a skewed bet, but it's no home run because there's no timing, there's no catalyst, there's nothing really happening. So yes, I'm long bonds. Yeah, I expect to make a bit of money out of it, but it's not the home run.
Okay. We got a more sort of big picture question, which is the U.S. undergoing Japanification?
Yes, I mean, demographics is everything. Demographics and excess debt leads to lower and lower GDP growth and lower inflation. I don't know how the US gets out of it. The argument goes that excessive use of the central bank balance sheet will generate inflation. That's not been evident elsewhere. I'm not entirely sure that's factual, but that's a big argument the market's having, so that's okay. Will massive MMT, will we ever get that? I don't know. But people are saying that could make a structural difference. I don't really see that. I just see a Japanification. And I've got coming up in the next couple of weeks, I've been interviewing some of the world's best demographers and people with skin in the game, investing capital, big capital based on demographics. So there's going to be a lot more coming on that because I think it's very important for the pension crisis perspective and very important just for people to frame, when they start screaming that inflation's coming, what are the counter forces against it? I think the Jeff Booth piece was important for that too.
Yeah. So we got a really interesting question here from somebody who has had a little bit of success trading over the last 2 years and wants to go set up a business in the Caymans, trading business in the Caymans. How do they go about doing it? How do they move to the Caymans like you, Raoul?
So it's actually difficult to have a Cayman Islands business. So it's easy if you have a business that does business outside of Cayman, like Real Vision. So your customers are outside. If not, you have to start a business here, and then foreigners can't own a full share of the business, so you need to have a 60% partner who's Caymanian. It's actually very complicated. Now, for trading businesses, there are trading businesses in what's known as the CEC, Cayman Enterprise City, where Real Vision is based. There are certain qualifications of what businesses apply for that, but people do it through that. That's very easy. Simple work permits, super fast process, very light touch, and a very easy place to do it, plus shared office space and all the stuff that you need to get going. So that's very easy. So just go to Cayman Enterprise City, look up the website, and you'll see it there. They're a good bunch of people. We've been there from day one. So it's about 6.5, 7 years since we first started, before we even launched Real Vision within CEC. And Global Macro Investors based out of that too.
Okay. And Andrew wants to know, he's asking about whether you invest in like alternatives. So like jewelry, cars, anything, art. Do you invest in any sort of alternatives? Or are you mostly focused on public markets?
No, I wrote a piece on Real Vision about this, about my investment philosophy that I put into Real Vision Pro, and we shared it in the community. I actually think of all of the investing is actually all about accumulating lifestyle tokens and not money. And for me, the largest lifestyle token is your house, where you live and how you live. That is what it's all for. If you don't invest in your life, then what are you doing? So I don't like, I'm not a big collector of art and stuff. Yes, do I like a painting or a beautiful photograph from a famous photographer? Yes. I'd rather have a house, a beautiful house, because I can really use that more than I can appreciate the art of the wall, even though I appreciate art. So I don't do that. I collect wine and I drink it. So how I think about that is I buy it cheap, and then I write it off to zero. And then if it's gone up a lot in price, I don't have the guilt of drinking expensive wine because I paid nothing for it in the first place. But I don't collect collectibles. I've had collectible cars and stuff like that purely for life because I've enjoyed using them.
Okay. What's the buy right now in the wine market?
Rioja, old vintage Rioja. It's ridiculously underpriced. It is the most underpriced fine wine on earth. And you can buy 30, 40, 50-year-old Riojas that are as good as any of the great Burgundies, and they are literally a tenth of the cost. I mean, you can buy, and I wrote a whole tweet thread about this, you can buy something like Viña Sandoña Gran Reserva, like a 1970, great year in Spain. You can buy that for about $250. Anything similar in Burgundy, $3,000, $4,000. I mean, it's crazy cheap, and these wines are immortal. I drank a La Rioja Alta 904 Reserva recently in Grand Cayman, 1962, and it probably still could go for another 20 years. And it, again, cheaper than a half decent Bordeaux on the menu. So, yeah, Rioja.
Okay, there we go. All right, we'll bring it back to markets. Let's see here. What about you've talked about debt jubilee over time and the fact that we are in a debt crisis. What do you think in terms of the end game for the debt crisis? What do you see happening? Has anything happened over COVID that makes you think we're getting
No,
closer?
nothing's changed. Everything's accelerated, and I've talked that at length for everybody and at length on Real Vision. Uh, and usually the debt crisis comes a few years after the economic crisis. Remember, the European debt crisis came in 2012 and 11, when the actual event was 2008. So this is yet to play out. That's another reason I'm very bullish on Bitcoin, is how this all plays out. We know there's a move to central bank digital currencies. Is there going to be some zero coupon perpetual bond? I don't know. Nobody has the answer. So looking for the answer, I don't know. But I know some of the lifeboats, and that's the reality. Is you don't know the answer, but you know the lifeboats. So if you know the ship's going to crash some point somewhere on the journey, well, if you've identified the lifeboats and maybe secured one or two for yourselves, then that's the better thing to do.
Okay. Well, one of those lifeboats is India. You've been a strong proponent of investing in India. We got a question from Abid who wants to know. He said, recently our governor has announced measures to restart the economy. Do you see this as a good decision?
Indian politics is even worse than US politics. And the Indians' ability to screw up their own economic growth is quite staggering. The ability for the stock market to trade at a huge premium at all times, never giving you a chance to get in, is also staggering. I mean, the Indian market corrects and straight back up again. So it's a very difficult market to get involved in, because your common sense is, oh no, this is a mess. The stock market keeps going up and it's really hard. But for any of you who really is interested in India, look what Mukesh Ambani is doing. He has pulled off one of the greatest single feats that I've ever seen in a corporate. So he decides to enter the Indian telco market, which is a saturated, boring, shitty telco market. But he comes in with brand new 4G infrastructure, no legacy. So his ability to give data to people on 4G is exponentially greater than anybody else. So he walks into the market and goes, all data is free. He takes a 25 or 28% share of the market and destroys people like Vodafone, who limp out and close out businesses. So he goes into this and it costs him 10 or $20 billion, right? So he's puked cash, issued debt, and everyone's like, what is this idiot doing? This is stupid play. Then in the last 3 months, he's just raised 20 billion from Facebook, Google, and every major Silicon Valley player who have invested in his new geo business, which is the mobile phones business. Because what he's building is the entire future internet infrastructure for India based on 5G, including a 5G competitor that's going to be more palpable to the US and others than Huawei was. So what we've got is he's then just taken again today, he took another 500 million and a few billion from other players for his e-commerce plays. He's basically building out a monopoly of the entire internet 5G technology infrastructure for the most populous country on earth. It is unbelievable. Now, what that does for India in terms of its productivity and the changes it will bring to people is enormous. Yes, it will bring changes because jobs will shift and things will happen. But this kind of stuff is, I've literally never seen anything like it. People have written that guy off as like, he's an idiot. And he raised the fastest amount of capital in all history for this. It's astonishing. And this is a bet on the future of India. And I totally get it.
Okay. Well, I'm going to cut off the questions there. Anybody who wants to ask Raoul more questions, we do this once a month on Real Vision Pro for Real Vision members. I had the pleasure of doing this, and even one of the members was lucky enough to have like 4 or 5 of their questions. A guy Cliff, he just asked
Cliff,
phenomenal
yeah.
questions, and he got them. So if you want more of this, if you want to hear more of Raoul's view, you got to go to Real Vision and sign up. It's an incredible value right now.
Yeah, and look, without sounding salesy, I can't get this across enough. We set this business up with one mission: to democratize the very best financial intelligence. We want to help as many people as possible navigate really complicated times. It was very clear to me that we were going to go into complicated times 10, 15 years ago, and it's been playing out pretty much as expected. And if you can't find the time or the energy to pay $1 to get a 1 month subscription, I can't help you. And it's not that I need you to sign up, but we're literally delivering everything you absolutely need to navigate your financial future. And if $1 is your stumbling block, you've got it all wrong. So look, it's there for you. Use it.
All right. Well, I think that's a great note to end it on, Raoul. Thank you so much for doing this. Thank you so much to all the viewers who tuned in. And yeah, I echo what Raoul had to say. Sign up. There's never been a better time. Never been a more important time to sign up.
More importantly, yeah.
Yeah.
All right, guys. I hope you enjoyed that. Thanks so much.